Small businesses are important for a healthy and functioning economy. They employ millions of Americans and spur new ideas and innovations. To do that, most of them at some point will require a small business loan. In this video, we'll discuss why small businesses need loans and the prerequisites for different small business loans. So let's get down to business, specifically small business. Starting a small business is rewarding and risky. According to the Bureau of Labor Stats, 20% of small businesses fail before year 2. That number increases to 50% by year 6. The number one reason businesses fail? Money, specifically the lack of cash flow to keep the business running in hard times. That could explain why the percentage of workers in America employed by small businesses has been steadily falling from 51% in '93 to just over 45% in 2019. Small business loans help those small businesses compete against the big fish with deep pockets. The average small business loan is just over $630,000, with an average interest rate of between 6 and 8%. The Small Business Administration, which lends federally backed loans to small businesses, loaned more than 63,000 businesses loans in 2019. Want to join them? Well, let's go through types of loans that are out there and what you will need to be considered. Business line of credit. A business line of credit is essentially a fund that you can repeatedly borrow from, as long as you pay it off and don't go over the limit, which is usually between $1,000 and $250,000. The requirements vary, but most lenders require businesses to show 6 months in business, $25,000 in annual revenue, personal and business tax returns, bank account information, business financial statements like profit and loss or balance sheet, a business plan, and credit score above 500, although some lenders do not have a minimum score. Short-term loans. Like the name implies, a short-term loan gives businesses access to cash that they pay off in a short time frame, 3 months to 3 years. Typical asks from lenders include a business tax ID number, personal and business credit scores, a business bank amount, 3 months of bank statements, annual revenues, and the amount of time that the business has been in operation. Business term loan. The term loan is a lump sum of money given to a business all at once that the business repays over time with interest. When considering businesses for term loans, lenders usually require businesses to provide personal business income tax returns, a balance sheet or income statement, personal and business bank statements, a photo of your driver's license, relevant commercial leases and/or business licenses, articles of incorporation if applicable, a resume or proof of business experience, financial projections if the company hasn't been around very long, a business plan, and collateral. Equipment financing. For businesses with poor credit or who just need some extra capital to replace or purchase new equipment, there is equipment financing. Lendio, a lender that does these kinds of loans, requires their applicants to prove $50,000 a year in revenue, at least 12 months in business, and a credit score of 650 or higher. Because these loans are used to purchase equipment which can double as collateral, they often have fewer requirements than other types of small business loans. These requirements are fluid and vary by lender. Accounts receivable loans. Accounts receivable loans allow businesses to borrow against their unpaid invoices to get emergency cash flow. The lender then takes the money from the vendors directly to pay off the loan. Because the money is coming from the vendors and not the business, a business needs vendors with good payment history and to meet the following requirements. Be a B2B or B2G business that invoices customers. Be in business at least 6 months. Creditworthy customers. Outstanding receivables. Submit outstanding invoices. Provide a driver's license. Bank statements. And a voided business check. SBA Loan. To get an SBA loan, a business must be a for-profit business, do business in the United States, be physically located in the United States, have owner invested equity in the business, go through all other potential funding options before requesting an SBA loan, have a sound business purpose, and prove that they can repay the loan. Of course, all of these loans are made through big lenders like banks and the government. You can also attempt to get a business loan through more direct agreements with venture capitalists, family members, or friends. For that, all you need is a legal document like a loan agreement. You can find a template for a loan agreement form in the video description below. We're eForms, the biggest database of legal documents. For more information about loans and for free loan form templates, check the links in the description below this video.